best time in the last few years to purchase stocks. So we're going to go over some stocks I'm adding to and some stocks I'm looking to invest in that are affected by what's going on right now. So stay tuned. This video is going to be a little bit long, so let's just get started. Number one, Verizon. Verizon, to me, I'm using it as almost like a bond play because you're going to get the consistent dividend from this company. Why I feel it's consistent is basically because you have the phone bills coming in monthly. You have the internet coming in monthly for like the FiOS. They do some other things too. But I feel like those two cash flows, especially like as we expand the 5G, internet becomes more a part of our lives. I feel like Verizon is going to be, it's going to act almost as a utility company, and I don't know if the whole nation was, but like here, and you can't turn off people's cable, you can't turn off people's internet right now because it's deemed a necessity. You can't cut off people's BG&E, which is our gas and electric provider here. So it's acting almost like a utility company now. So it's like deemed as essential. So I feel like this is a dividend, not a dividend, a utility play, but with like more upside in terms of like the price of the stock going up. Because I feel like with 5G and all that kind of stuff, I feel like there's going to be a whole new market for this company and the price can go up. So I feel like it's like a utility company with like some more upside. And for me, I already had this position, I'm adding to it. For me, it's more of a bond play, consistent dividends because you can't get much yield out of bonds right now. So consistent dividends from this company, and I feel like it has consistent cash flows to keep paying those dividends even in a downturn like this. And Wall Street, I feel like, agrees with that sentiment because you'll see the stock price hasn't dropped down as much as it significantly as the next company I'm going to talk about, which is Carnival Cruises. In terms of like their competitive mode, I feel like the cell towers and all that kind of stuff, because it seems like right now, even right now, like Sprint and T-Mobile, they're trying to do that merger thing. It just seems like it's just a type of industry that's going to consolidate because you like need the economies of scale, because like they split up these companies and they seem to just keep consolidating back into like a few major players, and probably put up cell towers and all that stuff. That's not going to be the easiest thing for somebody just getting out, just wanting to start out. Also, they have like the Northeast, like the markets that they're the number one company in, cell phone provider, or big markets, nice markets to be the number one provider. And I think people are going to see, because of their FiOS play, that they're going to maybe actually grow cash flows. Because me, I'm somebody who likes using the internet, but I'm not somebody who can work from home. People who work from home, they might feel as though that they need to improve what they're using for internet. They need it, and I feel like a lot of places might trying to, especially with this crunch that's going to happen, I think, with revenues and stuff, they might start to trying to close down some of the like physical places, and some people might work from home permanently now. And if you're going to work from home and you're going to make a living with the internet, you're going to need a lot stronger internet connection. So I think they're going to grow in the future. Like I said, I think they're going to be like a utility company, more growth upside. The second one, Carnival Cruises. Some of you guys were cringing when I first said that, but like for me, long-term play, a couple years out, I think the market will like forget about this. I know it's sad to say, but you know, rest in peace to all those who lost their lives during like 9/11. I feel like it's gonna be a 9/11 event. In terms of it's gonna produce a bad market sentiment for travel and like going on cruises and stuff. But I feel like that will pass and people will get back to it. I feel like millennials and younger will be more gung-ho about hopping on these cruise ships, and I feel like Gen X and the baby boomers, they won't be as gung-ho. It'll take them, that's what I said, 1 to 2 years for like everything to wear out, but I think it will bounce back. And I picked Carnival Cruises. I mean, I was buying Carnival when it was in the 30s. I thought that was a good price. When it was at $28 or so, I thought that was a good price. So when it gets down to $9 and some change, I'm buying as much as, you know, as I can afford to buy. So that's pretty cool to me, that it got down to that price. But I know it scared a lot of people. But what you got to understand is, like, as small guys out here, Wall Street is basically trying to price in, they're forward looking into what's going to happen. So let's go to the $28 and it gets down to 9 and some change. Let's 30 and goes down to 10. That's like a 60% drop, 66% drop in the price. Wall Street is basically saying they don't predict them to make any money at all. Even right now it's at like $14, so that's a 50% drop. So they're like, we don't expect you guys to make any money at all this year. Pretty much, that's how bad it is. So I think we'll see like maybe a couple quarters, for example. Carnival Cruises might lose $100 million, but they were supposed to lose 150, and you'll see the stock price go up, even though that they lost money. Carnival Cruises, to me, had the best balance sheet out of all the companies, and I feel like if any of them are going to survive, it's going to be Carnival Cruises, and if Carnival Cruises crashes, then all of them probably went down. So that's why I invested in Carnival Cruises, because I feel like beforehand they had the best balance sheet. Because they had the best balance sheet, to me, they'll be able to weather the storm better than everyone else, because they had like the most cash on hand and their debt management, all that kind of stuff. I do feel as though the debt isn't that big of a thing, basically because, in my opinion, the banks, because you take it back to real estate. In real estate, the bank really doesn't want the house. The bank isn't in the real estate industry; they're in the lending industry. So I feel like the bank probably doesn't want those cruise ships. Like let's say Bank of America wrote them the loan. Bank of America can't do nothing with that cruise ship from Carnival if all the other cruise lines are out of business. So yeah, there's a threat they can take back that stuff because they took out a loan to buy a cruise ship. There's a threat they can take it back, but if all the cruise lines are out of business, who are you going to sell it to? I'm not going to buy a cruise ship. You're not going to buy a cruise ship. They need the industry to stay in place. Otherwise, they just have a lot of just bad debt on their books. I mean, down the line, somebody would come and, try and start up a cruise line, or might have a real small cruise line that's able to grow out of this. But the banks, in their best interest, they'll probably work with these companies to make sure that they don't go out of business. Pure speculation, but that's just my thing, because like banks really don't want to take your house back because they can't really do anything with the house. They really don't want to take the house back. They're in the business of lending, not in the business of owning real estate. And I know they're probably not in the business of owning cruise ships. It's a bank, not a cruise company. So keep that in mind when you're looking at these companies and looking at the debt and that kind of stuff. It might be, if you get a decent one, you might not have to really worry about it too much. Number 3 is Uber. I like Uber before everything happened, because Uber was growing their not their cash flow, their number of rides. They were increasing very nicely. I stopped buying Uber once they got kicked out of Colombia. Why did I stop doing that? While I was in business school, I would do like a lot of my projects on companies that I was already invested in, so I can get like other people's perspectives on it and my professor's perspective. They didn't know that though. So Uber, they were trying to get into China, and Didi just washed them. Like Didi just went like, not to undercut them, like went free, basically. Like just like you can ride from here to there for free, long enough that Uber just left. So Uber, that showed me Uber doesn't have, and it can't really compete with Didi if Didi decides to like dig its heels in the ground and say, you know what, we don't care, you gotta get out of here. So that kind of worried me. And if you look at it, like Uber pulled back and stuff like that out of the Asian countries, and they're real popular like in the Western Hemisphere, like in Latin America, Mexico City, that kind of stuff. So which are big markets. So don't get me wrong, but when they pulled out of Colombia, this to me was going to let me see how the management was running, because this is a situation, I've been to Colombia and that kind of stuff. I kind of know how the country is. The leaders aren't super crazy or anything like that. So like this might be how they get treated in other countries that are rising, other rising nations. So when they got kicked out, I said, I'm not going to buy anymore, because Didi might just be on a wave to come and eat everybody's lunch. But they were able to pivot, come back, and now they're back in Colombia. They just tweaked the business model a little bit, but now they're back in Colombia. So that let me show like they can handle bad things, because the government came out of nowhere and said that before. So this is something that, because like I follow some people from Colombia, I know kind of like what's going on. So this is a situation I can monitor in real time when they're able to come back. Said good, that management is doing their thing. So when all this happened, I was like, this is probably going to be affect the Uber price because people aren't going to be take that many rides. Two things I was happy about as being somebody who's already invested in Uber is how much cash they had. So it seems like they'll be fine, in the short term. How fine can you be if you're not getting any revenues? But they're actually going to get some revenues because they have Uber Eats. And, some people, still take Ubers. You have essential workers, you still take Uber. So that stuff is down. But like Uber Eats, people don't want to. People are ordering delivery. So they have other revenue streams that, as an investor, you like to see. So when it got down to like $15 or so, I just had to buy some more because like if I like the company at like 30 something, I gotta like it at 15. And Uber has made its recovery after like they made the announcement they have so much cash on hand that they'll probably be able to weather the storm. So in my previous video, I said that for these next three, in my previous video, I said that basically it might be too late to get like the actual like bottom price for a stock. And here are two stocks I probably missed the bottom price unless things go left. Southwest and Boeing. This is the industry, the airline industry. I just want to make one play in the industry. I don't want to own a lot of companies in the industry. So I'm looking at Southwest. To me, the best airline to like invest in. It has twice as much cash on hand as it has debt. It'll be able to survive all of this better than any other ones. Like similar to me to a Carnival situation. Southwest has if Southwest goes down, probably the rest of them went down before it, and the industry is just kind of messed up pretty bad. But Southwest, they know who they are. They play around America. They go to like a couple Caribbean islands, and that's it. They know who they are. They don't compete on Expedia. They have the pricing power. They have the brand awareness. They have the cash on hand. And you'll see, like, if you look at them, and like United just got crushed. I think you could buy it for like a 2, 3, 4 PE. But Southwest stayed at like an 8 or a 9, and I think that's because Wall Street, things can get out of whack price wise and that kind of stuff. But I think Wall Street saw like how much cash and how the company's being managed and how much cash they had on their books and that kind of stuff. That's why they didn't drop down as bad, because they're not as at risk of like defaulting and going bankrupt. So that's why I like Southwest. But then you have Boeing. Boeing, it's either Boeing and Airbus, or maybe Boeing just by itself is like 1% of the United States GDP. There's only two companies that make airplanes in the world. It's a duopoly. So you have either buy from Boeing or you buy from Airbus. Down the line, I think China will try and get into the space and might be a third. They can't produce enough airplanes. There's like a 2-year backlog for airplanes. They did have the thing with the airplane that went bad, that had the bad stuff, but like they've been working on it. They've just been building airplanes. They've been trying to fix the issue, so they've been kind of ahead of it. The stock price Thanksgiving was like $352. It's like at 150 now. I think it got down to like, I want to say like 90 something. So, you know what I mean? That's a good price. But I probably missed the 90 price. It's probably not going back down to that. But I want to make one play, and I don't know if it's better to get with a company that's making their airplanes or to get with a company that's actually an airline. So I want to be in the industry one way. I don't know which one of those two to pick, but I think they're both good companies. One of them, I feel like because there's only one competitor for Boeing, I didn't think the United States was going to let them go under, because then you just have a monopoly, and they would either have to go and break up Airbus, and they can't fill the demand for the airplanes, and that's really why I didn't think they would have let Boeing go under. There's not, with two companies making airplanes, there's not enough demand. I mean, not enough supply. They can't produce them fast enough to meet the demand as it is now. So if you take out one company, and now you have only one company making them, it gets even worse. Prices of airplanes go up, flights go up, and that's either 0.5% or 1% of the GDP that just goes away. For a while, Airbus can grow, take over, but that's not the ideal situation. You at least want some type of competition. And then the next one is UPS. UPS, I don't really understand their competitive mode. I'm looking at it basically like FedEx were some guys that worked at UPS and decided to start their own shipping company. Why can't another company do that? I really don't understand the benefit of shipping to the point where it's like only 2 players in the United States. DHL, this is what I had to look into. DHL tried to come into the United States market. I got some advice on that. They told me look into that situation. DHL tried to come into the US market and failed. I'm trying to really figure out and understand why they failed so I could see what DHL did wrong, because DHL, like, when I got my cellular shipped to me, it came DHL. DHL gives you text updates. It's fast, quick. That's probably one of the things, like, I don't see why DHL isn't number 1 or why FedEx isn't number 3 or UPS is. I don't understand, like, the competitive advantage from UPS. I'd probably invest in UPS. This company didn't really pique my interest until I saw, basically, in the future, if things go to HE double hockey sticks, you know, people just going to buy stuff online. Like, UPS is still working. They're deemed as essential workers. This is a business that's always going to have some type of cash flows. At the company that I work for, we're still spending stuff UPS and UPS Freight. So this is a business that basically it's going to be one of the last companies to stop making any money. And I'm trying to understand the valuations of companies in this space. To me, they seem a little bit expensive even now, but this is the industry I have to figure out and figure out the competitive moat. If somebody knows the competitive moat for UPS and what's going on besides like the management structure, like is it some technology, why they're so big, why isn't DHL? So that's something I don't understand, and that's why I said, like, it takes time to properly look into a company, guys, and it's okay. So just take your time and look into it. I'm not Warren Buffett. It takes Warren Buffett time to look at stocks. So what are you and I going to do? You know what I mean? And then since I did Boeing and Southwest under one, I'll do another one that I'm looking at, and that's Dave & Buster's. If you haven't been to Dave & Buster's, it's like basically like a restaurant with a bowling alley and high-end arcade games attached all in one place. They don't have much money on their balance sheet, so I doubt that they would be considered an essential company. So this is a restaurant play. Like, if I'm going to invest in a restaurant, I probably would invest in Dave & Buster's or maybe a Starbucks. But I think I like Dave & Buster's a little bit better because I think VR gaming is going to be a big play, and I think they're positioned to take advantage of that. So virtual, I think Starbucks, consistent cash flows. I think Dave & Buster's might have an opportunity, 5-10 years from now to be like an even bigger company than it is now. So this is just something, none of this is financial advice, just my opinion. So this is why I think like Dave & Buster's might be a good play, but they don't have much money on their balance sheet. I think it's like $20 million or something crazy like that, where they might go out of bankrupt. So this is something I'm monitoring closely. I think it's at a good price now. This is a company I think is going to grow in the future. I think if I'm going to make a restaurant play, it's going to be this restaurant because it gives me other avenues in gaming and that kind of stuff. But this is a company that doesn't have much money on its balance sheet. So be careful, guys. These are my thoughts on a couple companies that are affected by what's going on right now, and some plays that I'm making and some plays that I'm on the fence about. So if you enjoyed, drop a comment below. Please subscribe to my channel. And if you guys know anything about the companies, or you guys think I missed something, let me know. Like I said, this is a think tank. We're just trying to put our thoughts together, and hopefully we can make some millions. So this is Nick signing out. Thank you for your time. Like and subscribe.